you for being here. So I want to introduce you to our audience. This is Tom Wall. He is the founder of Whole Life Masterminds. This is the guy with the Ph.D. in retirement income planning, which I don't know anyone else with that title. But you're someone who, in our series called All In, you are someone who is all in on the subject of life insurance. You were a financial advisor. You worked in the MassMutual home office as a consultant. You've spoken with, I would imagine at this point, thousands of financial advisors, but you have gone all in to the extent that you've quit your job with your salary and your benefits to go all in on the subject of life insurance and teaching and coaching about this product to our industry. So welcome, first and foremost. Great to have you here.
Great to be back with you.
So you and I have known each other, dare I say, about 20 years. And I've watched your career progress over that time, but can you just tell the story of how you went all in on this particular subject? Because it's risky what you did.
Yeah, so quick background. Yes, Amy, you and I were together. I was in your sales unit 20 years ago, believe it or not, where I started as a college intern with Northwestern Mutual in Springfield, Massachusetts. So it was probably just a matter of time before I got sucked into the home office. That's what happened. After about 4 years in the business between Northwestern and MassMutual, I went to the home office and basically became a product expert, for the company as a wholesaler, basically positioning whole life insurance and competing against its alternatives. I became so good at that I actually was promoted at the very end of that run to heading up our marketing team, about 19 individuals, the ones making the brochures, running the illustrations and things like that. And for me, it was almost a resume move in that scenario. I wanted to round out the resume, manage people, work toward management, but I became very clear to me very fast that what I wanted to do was actually just share the story. I didn't really care to necessarily manage people or build that part of the business. I wanted to be the one sharing the story, which is kind of what got me to that role. At the same time, what I was watching is big firms, including MassMutual, but across the entire industry, we're basically cutting resources in response to low interest rates and just in response to fee compression and all the things, all the shifts that are going on in our business, to the point where the home office resources that used to be more of a proactive push was really a reactive answer to your phone call if you called in. And to me, that's not how the whole life insurance message gets perpetuated. So I found myself in a unique position where I believed deeply in this stuff, had studied academically at high levels whether this was a good idea, proving to myself that it was, and nobody was out there sharing that message that way. So, after a while, I said, you know what, if not now, when? I'm not an old man, but I'm not getting any younger. Let's go out and do this and try this. And, worst case, I'll get a real job again. But for now, it seems things seem to be going well. And
so 18 months ago, you resigned from your salaried job to take on this subject. You also completed your dissertation. When you went into the PhD program, what did you go in thinking? And then post dissertation, what would you say you learned from the process?
Well, I went into the program obviously with a lot of conviction around whole life insurance as an alternate asset. I knew it was a good deal. There had been some studies, not a lot, but there's been some studies at the point talking about why life insurance was a good strategic asset. But the truth is, most of it was kind of a sales pitch. Even if you think about some of the marketing pieces that the companies put out, it's typically a cherry-picked, return pattern from 1973 or something like that. So anyone with any academic scrutiny would look at that and say, well, yeah, but what about the other 1,000 possibilities out there? It just hadn't been done. So I really wanted to study that and just to prove to myself that it actually was a good idea. I believed it would be, but also then have the credibility to then go out back to the marketplace, whether that's financial advisors or consumers, and say, hey, this is a really good idea for these reasons. Here's how we empirically back that up, but here's why it's going to make you feel good no matter what. It's really not it is a feeling discussion, but I wanted to have that behind me.
When you think about presenting whole life insurance to a client, the coaching that you give the people in your mastermind group, would you say whole life insurance is a math sale or an emotional sale?
I actually think it's a math sale. So I think a lot of the conviction comes around understanding where it fits in the portfolio. You and I have talked about this several times over the last 6 to 9 months as we've worked together. But first of all, life insurance is an emotional sale. We talked about disturbing the client. You have to actually create a need to pay for the life insurance, because that's otherwise you've got a very expensive product in front of you. So you got to create that life insurance need. That's going to motivate them to have the conversation. But then the discussion becomes, which flavor do we buy? Term insurance will solve it in the short term. Cheap universal life will solve it in the long term from a death benefit standpoint. So why whole life? And where the math comes in, it's not so much math, it's just more, you're going to have safe stuff in your portfolio. As I jokingly say, any reasonably created portfolio has a lot of boring stuff, because having that boring stuff that's safe, accessible, guaranteed to go up gives you the permission to then, with your other assets, try to generate real wealth, invest in equities, real estate, businesses. So whole life insurance, and I jokingly say, is the best boring money can buy right now. We need boring. Whole life insurance is the best boring money can buy. So that's where the math comes in, is more of, what are we going to do with those safe assets? What are you paying in taxes? What are you earning on those investments? What risk is inherent? I think a lot of bond investors were shocked last year when they saw their money go down by so much. They didn't think that was possible in bonds. So having those kind of conversations, I think, is important there.
And let's talk about advisors. So you help advisors, think about this subject and get better at presenting this concept to their clients. What advice would you give to new advisors when, they have so much to learn and so much for themselves to learn before they can even teach clients? Like, where does this fit into their learning?
It's a good question. So I remember early on in the business, our leader at the time telling me, stop worrying about knowing so much. You're going to study yourself out of the business. And I was one of these guys. I had to know everything before I could talk to a client. And in reality, if you passed your life insurance license, you now know more than 99% of the people on the street. You've studied enough. So you need to go in with that kind of conviction to have just a conversation. I think for new advisors, my advice would be, get really good at fact finding. It's the only thing that matters. That's it. In fact, if you sit down with a client, take a really good fact finder, ask them some really challenging questions, and you part ways and never speak again, you've left them better off than they would have been otherwise. So I would say, go out with high activity every single day, keep the calendar full, take as many fact finders as possible, not caring if they even go any further, because you've already delivered value. So the next piece is, if you need to be competent at everything, how much studying do you do? So I suggest most people don't become experts at whole life insurance or life insurance in general all up front. I think you spread it out over time. So that really kind of built my program that way. I call it the 3 A's. There's the attitude piece, which is showing up every day. There's the activity piece, which is not just picking up the phone, but also recognizing opportunities. I think that's where you become a student of the business, is not missing things, is understanding which questions to be asking clients. And then there's the acumen piece, which is the deep level knowledge of how the product works, how policy loans work. But I honestly think that's the least important. That's the piece that I lead with oftentimes to experienced advisors, to kind of get the buy-in, the 20-year veteran who's never seen that conversation on whole life insurance and why it empirically and academically fits. So I do that a lot, but I think for newer advisors, that's where you study yourself out of the business. I really think, the focus should be more on knowing a little bit about a lot, understanding the planning concepts that are around businesses and estate planning, so that you're recognizing which questions to drill in on and add even more value in the fact finder, if that makes sense.
Totally. Now let's take the more challenging experienced advisor. I coach a lot of advisors, as do you, and I have heard from so many experienced advisors in the last couple of years, my investment practice is great. Sure is easy to sell investments, but my insurance business just isn't what it used to be. There's just not the market for it, which, I can only imagine your immediate reaction to that objection. But what would you say to that?
Yeah, I think that's an excuse, if I'm being honest. I think that's an advisor making an excuse for a practice that has gotten pretty easy. I mean, the promise of this business is if you do it right, you can work less and less and make more and more as you build that, if you build that asset base, build up your team. And I think a lot of times I struggle with this for years is why can't I get these investment advisors? That was basically what I was tasked with. How do you get these investment advisors to sell whole life insurance? And I always thought it was this resistance or even, greed, and they just they're making too much money on their investments. They just don't care anymore. But really what I thought about over time is it's time, is you only get so many minutes in front of a client, and the client, and you need to do reviews of their portfolio, and they've got someone in their family that died, or they want to change their wills or whatever it may be. There's only so many minutes that you get in front of them. And life insurance is a conversation to not just talk about death benefit needs, but then talk about how the policy works, how the tax advantages work, how you access that, why the break evens take a while, but it's still a good deal, all those things. It's a conversation. It's at least a half an hour conversation, and it's probably over the course of a couple of meetings. So I think most advisors just aren't making time for that. They're not prioritizing that in the meeting. And if they did, there's absolutely a market for it. I mean, do you like paying taxes? What if there was a way to pay less taxes? Do you like places for your money where it can't go down? Right? There's absolutely a market for this stuff. So to say that there's not a market for it, I just think that's kind of a lazy answer. I don't think that's true at all.
Well, it's interesting because I've also heard this recently, which is, well, I work in the retirement income space. My clients are mostly 70 something years old. There's no need for life insurance at this stage. What would you say?
Yeah, I mean, so the two answers to that. If your clients are younger, for instance, if they're pre-retirees, or even if they're early in retirement, life insurance is a fantastic strategic asset to use in a retirement plan. I wrote a whole book called Permission to Spend. The retirement sale is within this context actually isn't using it for cash value. It's using it for death benefit. Retirees today, there's been studies showing that retirees are hoarding their cash. They're spending way below what they probably could, because they just have a big investment portfolio that may go up and down. And years like last year, even 60-40 portfolios were broken because of the way the economics shifted. So life insurance, really at all ages, I mean, until you're 90, I mean, life insurance has a part in the portfolio where it can guarantee a legacy, it can provide funds for long-term care, but also be a safe, stable source of cash that retirees need. So I don't think that there's never not a market for it. Obviously, if you buy it younger, it's better. You got more years to compound, you get more death benefit out of it, and you've got that runway. But I think some of the biggest cases that I've worked on recently are actually in the 65 to 75-year-old crowd, and it's not so much using life insurance to save it up and then spend it down, which a lot of advisors talk about. It's really more about, we're going to guarantee that the legacy is paid. We're going to guarantee that long-term care is funded, at least to some degree. We're going to guarantee that we have a bucket of accessible cash that's not subject to RMDs or any kind of market risk. And then with everything else, we're going to shoot for the stars, stay more fully invested. Instead of taking 4% withdrawals, we'll take 7% withdrawals, because we know that everything's guaranteed with these other products. So there's always a market for it, for sure.
You use the word conviction like 4 or 5 times in this conversation. When does someone, do you have to experience a death claim to feel convicted about whole life insurance? And how long does it take to get conviction around this?
Well, it's a good question. There's life insurance does a lot of things, but there's the two big things. There's the value at death, and there's the value while alive. So I think every advisor has been around a while. When they pay their first death claim, they'll all tell you that's the moment they get the religion, if you will. Like, I'm now actually changing lives here, and without me, this family could have been a GoFundMe family. I'm actually making a difference in the lives of spouses and children and maybe beyond. So there's that piece. But the other piece is when you think about the conviction, is the benefits. I mean, just go online, go to YouTube, TikTok, Instagram. There's just reels upon reels upon reels of people talking about infinite banking and all the different ways you can. That's a dirty word in compliance circles. They don't like those terms, but it's talking about is just using policy cash values, borrowing from the policy, and paying yourself back. That's all those concepts are. There's nothing more complicated than that. And that's where the conviction comes in. When you really start to understand that you're essentially getting access, via a life insurance contract to a big mutual company's general investment account, professionally managed by some of the smartest minds in the business. But through the contract, they've guaranteed away all potential loss. All right. You must go up in value. The only question is how fast. And every year you're going to get an enhancement via the dividend, which essentially represents the cash flow that their investment portfolio is getting. So that's a lot of nerdy words all at once. But that's, for me, that's the conviction is, wait a minute, I can actually get bond-like returns over time, but the company's guaranteed away all potential loss. And by the grace of Congress, they've guaranteed away all taxation if I don't mess it up. That sounds like a really good deal. And when you put it in that context, that's where the conviction comes in. That's where you're essentially, you're calling someone with a tip, like, hey, I have a tip for you. Let me let you in on a secret. I actually called my consulting company, Best Kept Secret Consulting, not because I'm the best kept secret, but because I'm talking about what I think I know is the best kept secret in personal finance and with participating whole life.
This is a funny question, but do you think, given what you know and the work that you're doing and the followers that you have and the people who are getting conviction around whole life insurance who may not have before, is whole life insurance becoming cool?
It never was not cool. What are you talking about? I think whole life insurance is about to have its next golden era. And that's not just hyperbole. I mean, if you look at dividend interest rates, they are the lowest today that they've been in 50 years. The last time dividends were at 6%, we're talking back into the 1960s. So that's what happened is you see, the cycles of life insurance. In the 80s, it was universal life because you could illustrate these, basically money market funds at 15%, crazy numbers. And then, the roaring 80s and 90s in the stock market, when you're illustrating conservative 12% on your VULs. And then those didn't work. So then IUL came out to be, hey, what if you could have VUL, but we'll put some guardrails so you can't lose money. Zero is your hero. And IUL had a great run, but that's probably broken now too, because, all the losses we had over the last year and some of the volatility we will see coming forward, that will shake out all the IULs. But whole life insurance is now positioned to see rising dividends for probably a decade or two to come if interest rates stay high like they are today, as the Fed has said they're going to until they see inflation go away, which it absolutely has not gone away yet. So the insurance companies are investing big dollars into long-term corporate bonds that are paying double the rates they were just a year ago, and that's going to flow through. So I think now, so we talk about whole life being cool. I think whole life's going to get really cool really fast, and I think advisors that are selling it today are setting themselves up to be the bearer of good news every single year on their policy anniversary when they get to say, hey, remember that policy I sold you? The values are even better than projected.
That's awesome. And so do you think, given all of that, can an advisor just be a life insurance agent anymore?
I think to start out in the business, you'd have a very hard time. I know life insurance advisors that call themselves life insurance agents. They don't really do anything else. They have some investment licenses, but they give it all away. These people that I'm thinking of are actually have been in the business though 20, 30 years. They've decided to specialize in either within a team or in their community and basically, give the other types of business to other folks. I think by and large, though, clients are coming to you because they want a one-stop shop financial advisor. They want someone that can talk to them about everything. They don't expect you to necessarily be the expert on everything, but they expect you to know about everything, so that they don't have to synthesize all that information on their own. So I think, and the other piece is when you talk to a client, they're coming to you with their hopes and dreams of retiring on time, financial independence, putting their kids through college, whatever their goals are. And life insurance is almost always a piece of that if they love other people. But it's, that tool alone is not going to get you to the promised land. So I don't think it's a good business practice. If you are that advisor and you lead with that, you could be fine. But those clients eventually will probably get stolen by somebody who's doing it all for them. Just from a business building standpoint, it's in today's world, I think you kind of have to be holistic. But nothing wrong with specializing and having people on your team that that can do that other work.
You wrote a book on this subject. Is your book, when you wrote your book, was it intended for clients or prospective clients who are considering buying insurance? Is it for advisors?
It's actually for both. So it's really meant for clients. The funny thing is, if the title is called Permission to Spend, that was the title of the book 7 years ago when I wrote the introduction. And then I sat on it for that long as the rest of my life was what it was. But it's called Permission to Spend, and it's really meant to talk about life insurance in its best form, which is insurance. It talks about life insurance as, the guaranteed legacy to your kids or your family. It's life insurance as a pool of assets for long-term care. It's life insurance as a stable source of cash, as a backstop, not as your primary, source of funds for retirement. And that backstop becomes your permission slip, essentially, to invest more aggressively, spend more aggressively, and just sleep at night knowing that you're going to be fine versus, all you have is this big volatile bucket of assets sloshing up and down and not knowing what's going to be there when. So it provides that stability. So I wrote it in the context of for clients. It's a book for clients, but I wrote it really so it would be something that the industry could use to give to their clients, because there's so few of those resources, third-party resources that just talk objectively about this. It's usually on company letterhead or with company logos, which is a turnoff, or it goes the other direction where it's just very high level and doesn't even mention life insurance, or particularly whole life insurance, at any meaningful level.
I've heard you speak about this subject in a very intellectual, academic way, to prove to those of us in our industry that this is the real deal. But on this call today, you talk about safe stuff, safe money, other stuff in a very casual way. And so I just think that what's so valuable about you and what you teach is you are the nerd on this, with all due respect. You can speak academically as someone with a PhD in this subject, but then you also teach how to present it in a tangible way, that in an accessible way. You don't have to really be an academic to get it in the way that you teach. So
No, not at all.
Commending you for that. I think it's awesome what you've done, which is like you get it from someone who has studied it, but then you've also been able to translate what you've learned into a way for brand new advisors to incorporate, or old dog, no new tricks. Maybe develop some new tricks by listening to your teachings or joining your Whole Life Masterminds group or reading your book. So I just appreciate that you're all in on this really important subject, and that you're making a huge difference in our industry by bringing this old school subject of whole life into the forefront, into today's conversations, and making it cool. So I appreciate you. I appreciate our friendship. I appreciate your industry knowledge and sharing what you know today. Just real quick, for people who want to read your book or want to be part of your Whole Life Masterminds, where do they go to find you?
So the book is on Amazon in all the formats. It's called Permission to Spend. You'll find it right there at the top of the list. There's one other one. For the group, you can go to wholelifemasterminds.com. If you're interested in becoming part of the group, we meet every other week. Half the time it's me doing deep dive concepts on technical aspects. The other half the time I'm inviting in my top of council level friends, or sometimes mindset motivation folks, referral coaches, things like that, to kind of keep you sharp and build your acumen that way. I think to your point, some of the approachable language, I forgot who's credited with this, but it's one of my favorite quotes. It's, simplicity is the ultimate sophistication. And I think from a personal development standpoint, I've had the luxury of just only talking about whole life insurance every day of my life for a 20-year career, essentially, give or take. So I've gotten very good at understanding the concepts, and then just very casually saying, look, you're going to need some safe stuff in your portfolio. A good portfolio has boring stuff in it. Whole life is the best boring that money can buy. Here's why. And I think it took me a long time to get there, but I think that's essentially what I'm offering, what I'm trying to bring out to the field is studying it at a level where, yes, we as advisors understand it and have that religion because we see mathematically why this works. But I think the next level is, but then how do you have a conversation with a client without getting that nerdy? And really, that's just a trust thing. They want to look you in the eye and see in your eyes that you believe in your heart this is the right thing for them to do. not just something that you've sold them.
Thank you. Thank you for having the conviction that you have, and then being willing to go all in and teach it to everybody else in our world. So I appreciate you very much. WholeLifeMasterminds.com is where to find you, and your book on Amazon is terrific. So thank you. I appreciate you taking the time today to have this conversation.
Thanks for having me. Good luck.